Good morning all, hope you're doing well. We had a big risk off day yesterday, a huge dump on the technicals, and here's how we fared yesterday. So indices fell, and the small caps, which has been doing very well recently, really fell 2%. VIX pumped and the treasury yield, the 10-year pumped. Indices fell, individual stocks fell, and the dollar rose. And the herd had gone along over the last 24 hours. If they continue to do this, we'll be sell at the big picture, and we'll have lots of red on our screen. So be really careful about buying the dip. If their retail guys are doing the same, it's going to mean that things are going to fall. Okay, so just a quick one there on the risk calc. So quite bearish, to be honest with you, unless of course these guys they change their mind. But if they continue to hold on to that bias, it will fall. So could be a bearish day. It will depend on this. Okay. QDB scores: Euro CAD at the top, Euro Aussie at the top, just risk off, and at the bottom we've got CAD Swiss, Pound Swiss. Kiwi USD has fallen quite a bit, and potential reversal on Kiwi CAD because of the extremity on the sentiment. So we can't get to 100% because it means that there's no one left to destroy. So you've got to be really careful with the Kiwi CAD. Show you the bubbles. Here's the dollar being strong, and there's the yen being weak. Okay, although it's actually performing quite well, so I think we're going to see a reversal on the yen potentially, and the yen's going to come over here, but we'll have to wait and see. So show you the indices in gold. And I was just saying to be careful with gold because we made a sell, so we can fall sentimentally. Fundamentally, it might not be the case. Okay, so it might just ramp up higher, pending the news in the Middle East. This was moving. Well, admittedly, they had sold it, so we probably could argue we pumped, but also it went in favour of the fundamentals, and gold really appreciated as a safe haven. So that was like a sentimental buy, but that's also fundamentally driven as well. They went long, price fell, went sideways, then they sold, and then just started to sell, and up we come. And so that's that. So while it might fall, we've got to remember fundamentals, but you could look for a sell with a stop at 1953, but it might just be a bit too risky. Now I'll show you S&P. S&P, look at that sentiment. They went long, and by doing so, price has fallen, and we're flipping over to sell at the big picture because we're above 50%. So the herd have just basically shot themselves in the foot by going long, and they're actually going to get destroyed because of it. And it's very, it's quite frustrating because you might have like a long bias on this, but when the herd do something, it does sort of screws your analysis a little bit. And we can see we're still quite well supported. I would have thought a break with that might have been scary enough, because the retail guys are looking at recent price action. So broken that. We might need to break this 4267, and then these guys will go, oh, we have to sell because they've already undergone so much drawdown and so much loss. They're gonna have to sell. So probably maybe a potential break, and then this sentiment will reverse. So it could be a heavy day today, and they're going long, so price has fallen, so it doesn't need me to say anything. You know what's going on, why things are moving. You hopefully understand why this has fallen. Okay, and DAX, and unfortunately because we went risk off, the robot's undergoing some drawdown, so that's another reason to be frustrated by the recent what's materialized in risk off in the world. But unfortunately things can't go up all the time, they've got to come down before they go up, and this is a zigzag risk on risk off fluctuation. So DAX has flipped to sell 51% long, and we'll have to see what happens today, won't we? And that's that. And so done gold and the indices, and I'll show you the Robot quickly, unfortunately we got a £39 loss, which isn't that good really, but we've got some risk on trades, which are probably going to have to go to stop loss. So I think we're probably going to have to look at the stop loss distance. If we're going to fluctuate on, risk off, risk on, risk off, then risk off, risk off. You know, if we're going to keep going flip flop, flip flop, flip flop, we might need to look at our risk management, because we've got wide stops. Now this would normally be okay if we were just not fluctuating so much on the risk appetite, but we are currently, and so we're going to have to probably look at the SL stop loss. So 6368, and then we've got 40 more pips to go. We might be okay, but we are positioned for risk on because we've got some old trades from last week, in fact 9 days ago, and it's incurring some swap as well, some negative swap, which is also a negative factor. So we'll have to see how we go. If we go risk on today, we might be okay, and if we go risk off, it's going to be horrible for the robot. So hopefully everyone's still testing it, and we're going to have to look at the stop loss distance, I think, and we're going to have to take it like maybe to 75 pips from 100. We need to reduce that loss ever so slightly, but with a wider stop it does cater for that nonsense. So we might be seeing some nonsense on the indices, you know. Perhaps this might be the bottom. If so, then you know that a robot can do okay. Looks like they're going along a little bit. 51.73, 51.70, so we're fluctuating there. So keep an eye on the trading station. Hopefully everyone's got a copy of this, and I'll be back later for the robot update. And I've got an optician's appointment today, which is cool, and I didn't sleep very well because Cookie woke me up about 6 or 7 times, so that kind of sucked. So hopefully today's going to be nice and easy, which it probably won't be, and we'll have to see how we go. I'll speak to you guys soon.